Hey everybody. I'm going to go ahead and make a video about the cycle analysis, so hopefully that'll help everyone understand a little bit more when I bring it up. This is the basic forecast model. I posted this in January 11th. There are 2 or 3 things you need to know about this chart. One, this line here is BTC's closing prices on the daily chart. And then this wavy line is the forecasted time cycle model. It's not linked to price, it's linked to time. So it's not saying that the cyclical top will be around $57,000. That's not what it's saying. It's saying that the cyclical top is around February 17th. How I use this is when the day comes up, like around February 15th or so, I am watching for bearish divergences or momentum that's pointing towards the downside, because they will coincide, like when those signals coincide with a cyclical peak or trough, then that is more, data that's pointing, like more and different data that's pointing to the same thing. So I can trust that signal more than I would any other time. The 2 dominant cycles that I've been using right now are a long-term 276-day cycle and a short-term 40-day cycle. The cycles mean it's the full term. So a 40-day cycle is a period of 20 days up and a period of 20 days down. The long-term cycle would be, I don't know what half of 276 is, but it'd be half of that up and then half of that down. Sorry. So right now, you get the shaded line here. It's out of sample data. I made the forecast model on the 11th of January, and it stopped including all the data from after that point in the model. So that would keep this forecast the same. And I do that so I can see how the model is stacking up, in the past to what I was originally thinking it would be like. Doing that allows you in the future to test your adjustment, or to test, minor adjustments, or make sure that what you were doing or thinking at the time when you didn't have all this information was correct or not. So you can continue either replicating the settings that you had, or you can adjust settings to get a better, more accurate picture the next time you do a model. All right, and how I used this, when I posted, we were at in January. I posted that BTC was at a cyclical peak, and there was also like a higher time frame bearish divergence. I think it was like 8 hour or something like that. It wasn't a day bearish divergence, which is what I'd want, but it was like an 8 hour bearish divergence trigger, and that lined up with the cyclical top. I think it was around this day or so, like closer to the 14th or 13th, I don't remember, but that precipitated like the downtrend back into the 30,000s, which lined up with the cyclical bottom. So as we're in this time frame, I'm starting to watch for, since this is a 40-day price cycle that I'm watching, I'm looking for I'm looking for bullish divergences which signal a bottom on like the 1 hour and the 4 hour time frame, maybe the 8 hour time frame. But I think we had the 1 hour bullish divergence, and I think we had a 4 hour later on, but I don't recall. But anyways, those bullish divergences triggered and signal the bottom. So since you have a bullish divergence trigger on a chart in TradingView lining up with a cyclical bottom in your price cycle model, then I would trust the signal that I'm getting on the chart, because you have different measurable data telling you the same thing that you're getting on another chart, and that's what you always want. You want confluence of events, two different signals telling you the same thing. So at that point, you can go long and trust that all your signals will be working. And then as you get towards the top of the cyclical peak on like the 15th or so, you're looking for bearish divergences either on like the 4-hour time frame, or since this is also nearing the height of a long-term cycle, you can look for bearish divergences on the 8-hour or the daily time frame. We got all of them. Like, I think it was like the 17th or 18th, and then again on the 20th, 23rd or so. Like, we had tons and tons and tons of divergences that triggered, and that lines up with the cyclical top and pushed this down. Now, using the original model, the short-term cycle doesn't bottom out until like May 6th or 7th. So it's entirely possible that we can get either, well, one of two things. One of three things. We can have either lower prices still if like a 1-hour or a 4-hour bearish divergence triggers, or we can have consolidation, or we can break the cycle and, continue up. All those three things are possible, and that's where this forecast doesn't tell you those things. That's where you still have to look at your charts and measure from your different oscillators. I don't typically update my original plan until a new quarter, so I won't deviate from this forecast model until April. But I went ahead and updated it anyways, just to give you an idea of where things stand at the moment. Here was where the original forecast stopped on January 11th, and now you can see that this line is all black as compared to where it was being shaded before. So it's including all these price variations inside its calculations and measurements for the forecasted model. So all of these will be different than what they were. I mean, not dramatically, because not a lot has changed, but they will be different. The biggest thing you can see is the cycles have shortened. You have 276 and 40. Now the dominant cycles are 198 days and 37 days. So all this, the cycle is compressed. The short-term cycle, instead of bottoming out around like the 6th or 7th, now it's looking like the 4th or the 5th. It's bottoming out there. And then the long-term cycle, instead of dipping down to its lower points in like April 17th and May 20th or so, it's like April 14th and May 16th or so. So everything is just getting sort of compressed. So if I hadn't taken that original forecast, or if I hadn't made that original model and I was looking at this, I would still sort of be acting the same way. Like, I'd be watching for a potential bottom in like the next 5 days or so, and keep that sort of like close in like not close, but I'd be expecting a bottom on a short-term cycle, but still being sort of hesitant in a longer time frame, because we're still coming off of like a long-term cyclical peak. Like, I wouldn't expect to be at the bottom of the bottom until like in between April and May. So I would play it alongside on shorter time frames, but not so much like opening the floodgates on, longs and futures, because I still think there's a little bit more downward to go. Now, one thing that's important to also remember with cycles is, since they're not linked to price, a cycle is very affected. The price is affected by volume. So like being at the downtrend, like being at the bottom of approaching the bottom of a cycle doesn't mean that price has to go down. If there's enough buying pressure, then price won't go down, but you can still be at a cyclical low. Like, so say, let me see if I can find a good example here. All right, so like right here, we have a cyclical peak, but there's consistent selling pressure and consolidation right here, keeping the price from going up. That doesn't mean that your cycle wasn't valid. It just means that there are external factors that are limiting the growth of that, like limiting the price growth in that cycle. And then as like price bottomed, or as the cycle bottomed out and you have a higher time frame, uptrend that's kicking off, then sellers can only hold out for so long, and then buying pressure explodes and the price cycle, fits the model like it normally would. The only times that like cycles, I don't have a good example on this chart, but cycles can be broken, and that's usually evidenced in like the mid part of the cycle. So like if we had like a dramatic drop in price, like right here around like December, then that would have probably broken the short-term cycle, and I would have just not used, I would have taken the 37 cycle out of the calculations entirely because it's not valid anymore. But so far, everything is still looking good. So cyclical bottom right now on the shorter term time frame, but the longer term time frame, we're still in a downtrend until May. So I kind of think we'll have just consolidation for a couple more weeks and probably some price growth, but we may not be blowing up past, new all-time highs until like the summer. But I mean, that's super speculation, and everything will change, as you get more data and information. This is just like a semi-educated guess. Like I always refer to the charts, like TradingView and those oscillators and price action over this stuff. This is just like a secondary like validation. Hopefully that all made sense. As with everything that I post, you can ask me anytime and I'll try and help understand in a different way. Thanks.